So, no time today for an edited video, so let's just do it on the fly with the phone. There's two major things happening today we have to talk about because they're going to have a massive impact on the way the market is going to behave today, this week, this month, and for the remainder of 2022. First of all, today at 2:30, we're going to hear what the FOMC meeting birthed, which kind of rate hike we're getting. And this is really interesting because everything changed after the August CPI. The August CPI came out way hotter than anybody expected at 8.3. Now look, 8.3% is no joking matter, especially when everything went up except energy, and we know why energy went down. Biden has been pumping out oil from the SPR, from the reserves, which he shouldn't obviously do, but it's an election year, at least midterm election wise. So with oil being artificially down, CPI actually came down from 8.5 to 8.3, but everybody knows the deal. The jig is up. So with that read, the Fed has been pretty much backed into a corner. They have no choice but to do another significant rate hike. And here's what I got to say about what's going to happen today. So today, you will find out how much the Fed is hiking the interest rate. And here's three possible scenarios here. And I'll tell you that in advance, some of them absolutely don't make no sense. They're very, very theoretical, but we got to talk about it. So there's, let's say, 0.0001% that the Fed does, a 0.5 rate hike, right? I would classify this, as a one grandpa head. Fake news, not going to happen. Now, there is a small chance that the Fed does a 1% hike. I would give this two grandpa heads as far as very unlikely, extremely improbable, but maybe. But in all honesty, and it seems to be the consensus, 85% of consensus makers seem to think it's going to be 0.75, which I agree with. So 3 or 4 grandpa heads, I would even go as far as 4 grandpa heads, which is fact. 4 grandpa heads for 0.75. Now, I'm going to play out the scenario for each of these. If, it's pretty much, as much of a likelihood as aliens invading planet Earth. But let's say the Fed comes out with 0.5%. The market is going to rally like you haven't seen in a long time. But again, that's just a theoretical thing. I don't think it's happening. Now, here's the interesting part. If the Fed comes out and actually follows through with the 0.75, I believe we have a somewhat of a positive day, maybe even a little rally, maybe even a big rally, I don't know. But a 0.75 is on par with expectations, which means that the certainty and taking away the 1% hike is going to have a little bit of fuel to let the market run up a little bit today. If the Fed actually comes out more aggressive with 1% today, which is an unlikely possibility, but can happen, then you're going to see some bloodbath in the market. So those are the 3 scenarios I think we can actually talk about here. Now, end of day today, we're going to be at above 3%. I think 3 or 3.25% if they do a 75 basis points. And that means by the end of the year, we're going to be at 4, 4.5. It's hard to say, but it's definitely going to be 4 and above. So here's what I have to say about this. The messaging from the Fed has been very aggressive lately, and that's good. They're changing the narrative. They're taking ownership of the narrative. They're creating trust again. And they're slowly but surely wiping away the shame of the transitory bullshit that we had last year. So the messaging is good. Now it's time for action. So we're going to see today what they're made of. If they follow through with the 0.75, it's another proof that the Fed is a different animal this year compared to the whole, transitory stuff. Now, here's a very important part. And I'm going to talk about Putin in a second. Hold on. There's a ceiling to how far the Fed can go. And at the end of this video, I'm going to link a video I did yesterday explaining why the Fed has a ceiling and they literally cannot go above a certain percentage of interest. They cannot go Paul Volcker. So hang on. There's a video coming up right after this video which will explain why the Fed has a ceiling, probably in the 5 to 6% max they can go. And the idea here is that they would need a few things to line up for the shit to work. That means that there's not a lot more left as far as ammo for the Fed. So that means they need the government to play ball, which means reduce spending, which means actually allow for GDP growth. I talked about it in my previous video. And, passing bills that forgive student debts and invest more of public money into government spending might not be optimal right now. So government needs to work with the Fed here. And again, everything is explained in the video I did yesterday, so you can go and check it out after this video. I think that now that we know that 4%, 4.5% at the end of this year is pretty much a certainty, what becomes interesting is two things. Number one, I don't know if you noticed, but nobody's talking about the soft landing narrative that died together with transitory. So we can say RIP, transitory and soft landing. Nobody's expecting a soft landing anymore. And here's the thing. The most important thing that I think, and this is the part where I share my opinion, the most important thing that will come out of this meeting is not the rate hike specifically. It's more of what Biden and Powell will do for the future. And the only way for the market to find out where the policy is headed is by nuance. So when Jerome Powell is going to be announcing the interest rate hikes today and talking about it, everybody will be listening to any hints, clues, or cues about what happens next. Because 0.75 is pretty much a certainty. So Jerome Powell's choice of words today will be very, very significant, because the one thing that is unknown, the one thing that's variable, is the future. And whatever he says about the future, about how dovish or hawkish they're going to be in the future going forward, will have a major impact on how the markets will react. Now, mind you, Jerome Powell doesn't give a shit about your 401k or your portfolio. He doesn't care. He is going after the bigger agenda here, which is bring down demand, slow down inflation. So you're just a casualty of war. You're just collateral damage, and that's the way it should be. The Fed shouldn't care about these things. So Jerome Powell will not be standing up there trying not to crash the market. He doesn't give a shit. I, in fact, would tell you that he wants to do the opposite, because the Fed doesn't have a lot of interest rate hikes left that they can do, and I'll explain why in the following video right after that. So there's going to be a link to that. Because they cannot raise interest rates much higher, Jerome Powell needs the market to pull back. So he needs to scare the market into submission. He needs the bluff to work. So in fact, I think he's going to drop some clues today, trying to slow shit down. I don't know if it's going to work or not, because he can't be blunt about it. Now, a lot of people are saying, well, Tom, the market is, the economy that is, not the stock market. Everything is great. We have under 4% unemployment. Everything is great. I mean, we will not have a recession. And to these people, I'm just going to say right now, we're already in the recession. You just don't know it yet. Now, of course, they changed the definition of a recession. And that's no longer, 2 consecutive negative quarters of GDP, and that's okay. But look at what's going on in the job market, which everybody's praising. Just today, we heard Boeing is cutting 150 jobs. Gap also today announcing they're cutting 500 jobs. Last week, we heard Twilio cutting 11% of their workforce. Earlier this month, Google is hinting at 20% more efficiency. Tesla did this. There's a lot of evidence that things aren't exactly peachy, even in the boiling hot job market. So I urge you to be very careful. Now, talking about Putin next, that's our next item of business here. So Putin announced what is defined as partial mobilization. What it means that in the case of full mobilization, that means full all outright war, everybody's getting drafted, etc., etc., etc. He did not announce that. He said that they're going to be mobilizing reservists, which is a bunch of overweight, out of shape dudes who do not want to be there, will be sent to this absolutely ridiculous war that should have never happened. So the problem with this move is that it can mean two things, and the chess game that's going on here, I don't know, but I'll tell you what are the options. So Putin comes out yesterday and it hints at nuclear weapons, and it hits and basically hits the nail as far as, yes, we're mobilizing, but partially. So that means two things, because everybody knows Putin is in trouble right now. So it can be either of two. One option that is that it might be just a tactic for him to get a better position for the peace negotiations, right? If he's trying to get a better deal, you don't want to come from a place of weakness, you want a place of strength. So that may be one option. He's just announcing this, is posturing because he's trying to get a better deal, a better leverage for negotiating to finish this fiasco that he has started. Option number two, he might not be bluffing, and like he might literally be punching up, because there's this Russian thug mentality. If you're a street kid in Russia, the code is that if somebody bullies you, even if they're huge and massive and you have no chance, like you punch up. So he might be just, tapping into his Russian, Soviet style street thug mentality. And he's basically saying, well, fuck that. I'm losing, I'm going to punch up. I don't know which one of these he's going for here. If he is going for option number one, that's actually a positive for the market, because as soon as a deal is reached between Russia and Ukraine, a lot of the things that are holding down this market will be released, and it will be a major positive catalyst. If he is going for, punching up and basically making things worse, I mean, winter is his best friend, and every major war that Russia participated in, winter was always a big part. And you already starting to see the signs. Germany just announced today they're nationalizing Uniper. It's an $8 billion bailout. Uniper, for those who don't know, that's Germany's biggest gas importer. And they literally have nothing to import because Putin pretty much shut down the flow. So Germany is already bailing out an $8 billion company. It's a bailout, sorry. And this is just the beginning. And it's funny to me that we even have this conversation, because I've never heard of a company that had energy independence, which is something China would kill for. So you have energy independence, Germany that is, and you just give it up for nothing. I've never understood that play, and I find it peculiar. So there's a very famous scene where I think President Trump was talking in the UN rally, and the German delegations were laughing when he was saying, you guys are going to be owned by Putin because you just handed your energy independence to him. So now we're seeing how this is playing out. And this is not a political statement, it's just logical. Now, a long war with Ukraine is not good news for the stock market, because it means increased pressure on oil, on energy in general, on commodities, on wheat, on food. It's going to be a big mess. Now, what I found specifically ironic about his speech, which I'm sure all of you have watched, of course not, in his speech, he literally threatened the West that he's going to use nuclear weapons. And he said, I'm not bluffing about nuclear weapons. And then 5 minutes later, he was talking about how Russia is threatened by the West and their nuclear weapons, and how the West is dragging us to nuclear warfare, which I found absolutely insane that he had that to say. But again, it's just my 2 cents. Everybody's entitled to their own opinion, which I'm sure you guys have. As far as where it hits the market, where it meets us as investors, if Putin is doing this to improve negotiation position, that's a good sign. And if the Fed will actually come out with a 0.75 and there's more certainty, and the market actually might have a little bit of a push upwards. But again, all of these circumstances are extremely fluid. They change and shift all the time. So we cannot make any predictions about the future, but this is kind of my understanding of the situation, and I wanted to share this with you so you have it as well. Thank you so much. If you haven't yet, by the way, and if you lasted 15 minutes into this video and you enjoyed this video and you enjoy my content, I would really appreciate it. I never asked this, but if you lasted this long, I know you're OG on the channel. I would really appreciate it if you could subscribe to the channel and hit that little notification sign, because I mean that's pretty much one of the most important things for the algorithm. And now that's something that I have to be mindful about. So if you want to see more of these videos and you want to see more of my channel, getting on the good side of the algorithm is important for me. And I mean, subscribing and hitting that notification bell is really going to help me out. Thank you so much. I appreciate you waiting for me to ramble on about the algorithm. Let me know your thoughts below, whether you think Putin is bluffing or not, whether you think the Fed will raise 0.75 or 1, and what's going to happen. I always enjoy reading your comments and your input. It's just as good as mine. I don't think the show is about me. It's about creating this collaborative space. So always happy to hear your comments in the bottom of the video. I go through, I would say 95% of them. It's always a great pleasure, excluding a few idiots, which is kind of par for the course. I don't mind. It's all good. I'll see you tomorrow.